Hello and welcome to the Wirt-Rivette Group's Take 10 training. We really appreciate all of you signing in, and we certainly appreciate your commitment to continuous learning and professional development. Businesses across the country are challenged today with the challenges of financing growth. It does appear that the small and medium-sized businesses that have survived the past 2 years of a very tough economy are now positioned to grow. Heck, you've made it. These growth opportunities can only be obtained if you have the capital required for growth. Growth capital can be found in three primary forms: cash, loan, or lease. Let's discuss the different aspects of these in the next few minutes. Let's first discuss cash. Well, that's the stuff in your wallet, right? And there's the old saying that applies to the growing business, and that is growth eats cash. Ensuring that you have enough cash on hand to support your daily operations and growth opportunities is critical today. Many of you may have experienced banks reducing their credit lines or not even renewing them, even for good credit clients like you. The key question is for business owners: if I spend my cash on purchasing a piece of equipment required for growth, will I have enough cash to support other growth opportunities and requirements along the way? From a finance perspective, you may want to answer this question by confirming what you can make in your business by keeping the cash you have at work in your business instead of spending it on equipment. Consider how you can use your cash to support your core business, also to have it available for the growth opportunities as they present themselves, especially as our country continues to recover from the economic recession. We have found that ensuring your business has solid and controlled cash flow is a fundamental requirement in today's economic and banking environment. With this in mind, let's move to reviewing the other two types of capital sources that are available for growth: loans and leases. Almost every small business has used a loan at some point in time. Reality today is that loans are a challenge to obtain, given the current banking environment. Let's take an example. Assuming that you've concluded that you'll use your cash in your business, but you need a piece of equipment, say $50,000 for a solid growth opportunity. You can obtain a loan or a lease to support this transaction. Most banks only provide loans. Some do both. There are several differences between a loan and a lease. Key aspects are noted here on the screen. Most loans require a down payment of 10 to 25%. The term, like a lease, will probably be about 24 to 60 months. Your credit will determine the approval criteria and the interest rate. You'll report the loan as an asset on your balance sheet with a corresponding liability, and the interest on the loan may qualify for a deduction, but the entire payment will not. Always check with your CPA on these type of deduction questions. And of note, ours is the Raymond Group, and we strongly recommend your consideration for them. Also keep in mind that the bank decision process involves committees. You'll certainly want to ensure you leave enough time to submit your request, required financial and equipment information the bank will need. An alternative to a loan is a lease. Companies like Wirt-Rivette work with clients, businesses, and equipment companies to provide lease solutions for growth-oriented companies. Basically, any type of equipment can be leased. Copiers, forklifts, bulldozers, office furniture are just a few examples. Key aspects of a lease are shown on the screen. Most leases will provide 100% financing. Terms are noted. Your credit will determine the approval criteria and the monthly payment. And Wirt can even work with your bank to provide you a below market rate. We call that the special rate program. The total payment can be expensed and is recorded as an off-balance sheet transaction. Again, check with your CPA on this. These companies are usually able to provide payment quotes and approvals very quickly. Whether you choose to use cash, loan, or lease to help fund your growth opportunities, please ensure you are always prepared to submit your full financial package and background. One of the outcomes of the banking and the financial crisis is a return to business fundamentals, closer scrutiny on company financial performance, and cash flow. And also, a bank will try very hard to understand your company's industry segment. Banks and leasing companies will normally require the following to assess a loan or lease request. Those items are noted on the screen and include 3-year tax returns, business plan if a new business, your personal financial statement, statement describing what the equipment will do for the business, basically how it will generate additional profits and growth opportunities for your firm. An equipment description and quote will be required, and probably cash flow statements and sales projections will be required as well. Having this information prepared in a professional packet allows your business to always be ready for growth opportunities. And our affiliate, Global Perspective Consulting, also has a program to assist you in this regard, and you can contact us for details. Thank you for the opportunity to present growth and finance for your business and the options for those: cash, loans, and lease. The Wirt-Rivette Group provides financing for equipment and commercial property. Additionally, through our affiliate Global Perspective Consulting, we are able to assist businesses with other programs and services that allow you to pursue paths of profitable growth. Please contact us to discuss how we may be of assistance, or if you would like additional information on this topic, or the future schedule of other webinars. Thank you.